Hello, everybody, and thank you for joining us today for our next broadcast of CPS Live. We have a stellar lineup for you as usual. If you have any questions for our panelists during the presentation, you can enter them into the chat or Q&A panels, or if you like, use the raise your hand tool, and I will unmute your line so you can ask it live. So without further ado, here's our MC, Mr. Tom Berkler.
Lisa, thank you. And you sound pretty perky. You're just coming off a vacation, you know?
Well, that's why I'm perky.
Yeah, well, when we get Brian and Steve back right after vacation, it usually takes them 10 or 15 minutes to get up to speed. So, we're here. It's June 7th, and I think all of us realize yesterday was June 6th, D-Day, and we kind of have a special level of appreciation here because, Brian, you were on Omaha Beach, weren't you? I mean, you don't look that old, but...
I was serving refreshments for the guys that were thirsty. So I was on the...
Oh, I remember the story. Now, you were serving refreshments in Omaha, Nebraska. I'm sorry. I got... Brian, you got a date coming up here, an opportunity for the folks in the form of a webinar on June the 26th. You and I were kicking this around before we got on the air here. And you were talking about the fact that the statistics show us there's $5 trillion in money markets that are out there right now. And we aren't telling anybody anything when we say that the rates on money markets are characteristically low, even in a low interest environment. Plus you're taxed on the return every year. And you're going to have some ideas here in this webinar, how maybe annuities could benefit people in a lot of ways that are currently holding on to money markets.
Yeah, and to elaborate on that, there's over $5 trillion in the money markets as of the end of April 2023, which exceeds the record level from March of 2020 during COVID. A lot of uncertainty in the market, and the perception is to clients that cash is safety. But the reality is, cash as an asset class is the worst performing year to date. And that's usually what on the investment side is money in motion, finding and how to tackle those client biases by using investments that have predictable outcomes, such as our fixed rate annuities. We've been using on the alternative MIGA idea with Lincoln in their OptiBlend 5, using their fixed account, mixture of their fixed account and their S&P trigger, which can manufacture on a 5-year higher rate of return, hopefully for the client, and pays $1.25 more percent to the advisor. So there's an idea on that side. And when we look on the fixed index side, on June 22nd, we'll be hosting at 11 a.m. Pacific time. We'll be hosting with Gillico a value add type webinar on behavioral finances and how your clients look at things, identifying 4 client investment styles, recognizing client biases and aversions in decision making, finding solutions to those biases, including discerning how predictable outcomes investments can remove those biases, and then just positioning the fixed index annuity into that investment plan. If you think about it, the majority of the wealth that's being held today is between the people who were born in the 1940s up to 1965. They built up this nest egg. They love to participate in the market. These type of investments give them zero downside risk to their nest egg, an ability to get a double-digit return, tax deferred in the market. And the best part about it, there's no explicit fees or fee drag to the client. So those are some of the things that we'll be going over and sending over those, sending out that invitation out shortly to everyone as well.
Brian, I heard you mention fixed annuities, and then you mentioned that but basically you described the baby boomers, but they like to participate in the market. How big is a step is it sometimes to get them off a fixed annuity and say, well, let's take an annuity that's got a little bit of upside swing possibility. I'm throwing this at you. We didn't talk about it, but does it transition to maybe something with a little more flexibility?
It does. So on the fixed index side, it's just where rates are right now. I think the biggest thing is it secures them from their risk of a downside, losing a portion of that money or having that being very volatile. So we can create you to have zero downside risk. and being able to participate in crediting methods that mirror the markets, whether it's the S&P, however, whichever one that you choose. But it's an ability to have that flexibility to move in and out of those and diversify with that money throughout the contract. So you do have that flexibility. And a lot of these, they do allow access for liquidity up to 10% free of withdrawal charges every year. So there's a lot of flexibility and less fees than maybe the variable partner would be.
Yeah, yeah. Repeat then, give us the time on that. Lisa put a notice up on the screen there, but will you be on this webinar? Will they see you, Brian? I don't want to lead them in because they like you and then you don't show up, you know?
I will be there. I will be there on, barring no lottery winnings, I will be there. Thursday, June 22nd, 11 a.m. Pacific time. It'll be a value add with Gillico on behavioral finance and how your clients navigate these choppy markets.
All right, great. Thank you, Brian. We got Steve Jones on with us. Steve, I was thinking when we started that you have the toughest job of anybody on the screen here, except for maybe Lisa Navarro, who I think is actually hanging sheetrock while we talk.
Overhead.
Lisa on the ceiling. Wasn't that what you told us? Yeah, overhead.
Wow.
Yes, I balanced the panel on my head like a bucket of water. It was pretty innovative, I thought, but tough, actually.
That's remarkable. You, Lisa, you continue to meet and exceed expectations. So just put yourself on mute, so if you lose your balance, you won't disturb Steve. Steve, I'm half kidding with regard to you having maybe a tougher job. Brian, we work to sell annuities, and basically it's who's got the money and can show it wasn't laundered. That's the long and the short of it. And we get over to the life side, and you've got, of course, some financial justification, and you've got medical issues. But when you're talking about income protection, disability insurance, there's a whole array of things you have to deal with.
Yeah.
What's their occupation? Can you deal with ONOC? How much can you get? And you and I were talking before we got on that you've got a whole array of challenges with a client that comes in, and you found that in some cases where they may be greatly limited as to how much they can get as an individual, you've been able to push them in a direction that opened up the door to greater benefits. Talk to us about that a little bit, Steve.
Yeah, and this is a scenario that happens to us, pretty often. It actually happened again earlier this week. One of our brokers calls me up and says, "Hey, Steve, I have a client that needs disability insurance, or as we prefer to call it, income protection." And like you mentioned earlier, I asked the broker the normal questions: his client's name, date of birth, gender, occupation, if they had any coverage, any known health issues, etc. Now, this is a broker that we worked with in the past, so he was able to provide all this information, which was good. Now, with this case, the client works in an occupation that was unfortunately a no-go with most of our carriers, and was the lowest occupation classification with the other carriers. And just like in life insurance, the further you are down as far as the rating class, the more expensive it's going to be. Now, the good news is, because we do have a couple of carriers that write this occupation, and this occupation was a chiropractor, we are able to write this occupation, but due to the low OCC class, the premium's a lot higher, and there's some limitations as far as the benefits. Partial's not quite as good. There's a limitation in the duration, of the benefits. And I shared all this, with the broker and some of the challenges that we might face. And here are the carriers I'm going to go to, but here's the challenges we're going to face. And then I asked them, hey, is your client, does he own the business, or does he have any ownership in the business? And in this situation, he said yes. He wasn't exactly sure how much, but he was an owner in the business. And from there, I segued into group benefits. Because with a group plan for somebody like this, I think we're going to be able to put the broker and the client in a much better position as far as the benefits themselves, and it's going to be a lot, less expensive. So And for those of you that don't know, we do write group benefits, group life insurance, group short-term disability, long-term disability, dental and vision on both an employer-paid basis and also a voluntary basis. We can actually go down to only 2 full-time employees, and it can actually be a husband and wife. But in this case, it was a chiropractor. He's got a couple more people in his clinic, I think a couple of technicians and maybe a front office person. But now this is still a work in progress, but in the past, we've had a lot of luck with transitioning from individual plans to group plans for these type of occupations. So yeah, to be determined, but I feel pretty good about the outcome that's going to be pending.
You said one of the advantages of the strategy you're suggesting, Steve, was lower cost.
Yep.
I assume that means lower costs with regard to the coverage on the particular individual client that came in, correct?
Well, and a lot of times, if you have a smaller group, you can actually, because of this low OC class, you can actually get a more cost-effective plan, even if you have 2 or 3 people in the company. Now, every situation is different, but I've seen that happen quite often where I will quote the individual plan. Hey, here's what I'm going to do. I'm going to quote individual coverage, but like we talked about, we got some challenges. I'm going to follow up with a group plan. Then I follow up with a group plan. We kind of strategize what's the best way to present it to the client. But a lot of times it does work out, better benefits and more cost effective.
Yeah. And I heard you say, if I heard you correctly, sometimes the group is basically includes just a spouse who works for the company anyway. So they
need to be working on a full-time basis, and it needs to be a particular class of employees. It just couldn't be, the husband and wife. Now, it would have to be a class, whether it's management, owners, office staff, whatever. But as long as we have a discernible class, you can definitely class out certain people.
And the point is here, bring the client into you, and if there's a better alternative, expanding it in the direction, you and Tom Nichols will address that with them. So
exactly. And keep in mind, we do have a lot of customizable marketing material that you can have to share with your clients. And if you just don't feel comfortable talking about disability insurance or just don't have the time, we can partner together where you make the introduction to Tom and I. We actually take it from there. We call the client, prepare the proposal, do the presentations, application, all the way through underwriting, through policy issue, and you're still going to get paid commission on the case. So keep that in mind.
You'll do the heavy lifting.
Exactly.
Kind of like Lisa Navarro's doing the heavy lifting with the sheetrock right now. So
well, maybe not quite that hard, but yeah, we'll do as much as we can.
Brian, thank you, Steve. Brian, I was going to ask you at the end of years, I always like to ask you just quickly, what's the best deal on fixed annuities right now, and what's the best deal overall?
Well, I think on the fixed side, you're seeing about 5.45 on the 5-year. But we're seeing some more interesting moves on the fixed index side with bonuses and high rate caps out there too as well. Yeah,
things are looking up. So gentlemen, Lisa, any last words? You were on mute there for a minute. That wasn't to mask a crash or anything, was it?
Well, you told me to, but
yeah.
No, thankfully I am safe, folks. Rest assured.
All right, so take us out of here, Lisa.
All right, thanks for joining us today, folks. We'll hope to see you at our next CPS Live event, which would be in about another 2 weeks here. And I hope you have a great day.
Thank you. Thank you, men. Thank you, Lisa.
Thank you. Have a good day.